earnings. Irfan Razack, Chairman and MD of Prestige, is joining us now. Mr. Razack, afternoon. Thank you so much for your time. Mr. Razack, sometimes it's not right to look at real estate companies, especially size of yours, on a quarter-to-quarter basis. So I'll zoom out a bit and talk about the work done in the 9-month period. You have achieved almost 82% of your guidance of 20,000 crore for the full year. Are you on track to finish it? Will you overshoot it by the time we are having this discussion in March? How does it look like, the run rate?
I think since we've already done 82% in 9 months, I'm sure we will overshoot it. We had guided around 20,000 crores of top line sales, and I'm sure that we'll exceed that.
Overshooting, you also had set a target of doubling your revenue, which was there in FY23 by the time of FY26. It looks like you're likely to overshoot even that guidance and probably achieve that in FY25 itself.
I mean, that's work in progress. If it's, see, there are two parts of, one is the operational revenues and then one is the financial revenues, and that financial revenues get booked on the accounting system. And every quarter is lumpy, like you rightly said. And I believe that there's a whole lot of sales that have happened, but we need to convert that into revenue that can be recognized in the books. And that happens only by handovers and completions. So that job is work in progress. And I believe there's a huge amount of sales that have to get recognized as revenue, and that I think it exceeds around 50,000 crores worth of sales which are there in the bag, which have not yet recognized and not come into the P&L account and the balance sheet, which will eventually come over the next 2-3 years.
Mr. Razack, we also see that your net debt has also risen to almost 7,000 crore. Yes, your receivables are very healthy, but what's the plan here? As launches gain pace, would you reduce it, or you're comfortable with these levels?
I think the levels are pretty comfortable, but the endeavor, the long-term endeavor always will be to see how we can keep debt in control, how we can bring it down, and how we can do without borrowing. And that's always been our challenge, and we always would like to, because today, now if I've increased my top line sales from, say, the last 2 years from 13 to 16 to 20, obviously there is a requirement to buy more raw material, and raw material comes in the terms of land. And now this actually requires money, and that's how sometimes the debt level goes up. But once the launches happen and the cash flows come in, automatically that gets reduced. I always say in the residential business, even if there is debt, it has to be only short term. But long-term debt comes in for all the other assets that we hold on for long-term in terms of getting annuity incomes like the office or the retail malls, as well as hospitality. These are long-term play. And there's again a mix of equity and debt. And I believe that at that 0.65 times debt levels, we are okay. We are fine. I don't think we should worry about that.
Worried about the debt levels, but I just had a follow-up to the initial conversation that we were having. So, of course, 20,000 crore was your pre-sales guidance for FY24, I beg your pardon. But what does it mean for FY25? Will this number be closer to, let's say, 25,000 in FY25? And also, when you say that there is almost 50,000 crore worth of revenue which has been booked but not has come into the into the P&L, what are the slippages which are happening? Because right now we are hearing from a lot of these developers that the inventory is getting sold out of the shelves pretty much, but are there further fallouts or cancellations as well at later stage?
No, there's absolutely no cancellations. When I said we've got so much in the bag, what I meant is the revenue that for the financial results gets booked as per the accounting standards only when the project gets completed and the handover happens to the customer. So that's where the entire endeavor is, for us to see that we produce the goods, we have the customer, we have the cash flow, and our job is now to see that we get our act together and deliver within the time. Fortunately for us in our company, we've had no slippages on time. We've always delivered on time. We delivered a project in Hyderabad just last week. We are just 1 year ahead of schedule. Similarly, in Chennai, another project a year ahead of schedule, and most of the projects in Bangalore also ahead of schedule, including Mumbai. So we are working hard to see that whatever commitments we have made in terms of sales booking, that we try and speed that up, and we see that we deliver it in quality, in time, and that's always been the endeavor of the team, and I think they've done a good job of it.
Mr. Razack, just before we let you go, I want to understand how's the last quarter looking like in terms of launches?
Yes, I mean, see, that is the last quarter's, this current quarter, which is going on. Though, see, again, it's a function of getting the approvals. We have got a couple of approvals, which hopefully we should be able to launch a couple of projects. There's a big pipeline. There's a lot of work in progress. But as soon as the approval comes, it's a registration in terms of registering with RERA and then launching it. And this quarter, we'll have a project called Prestige Somerville that will come in Bangalore in Whitefield. And apart from that, there are a couple of other projects that we are working on in Bangalore, which should have got launched this quarter. But that depends on how quickly I'm able to get the approval and the RERA. However, even in Mumbai, my Prestige Forest Hills, part of the Prestige City, Mulund, even that was to get launched this quarter. Now, we are trying hard to see whether we can get it in the last month. If we can, fantastic. Otherwise, it will spill over to the next financial year.
Before I let you go, something important you may wish to answer or may pass on, but there is a real estate company, Mumbai-based real estate company, where you have stake in there. They have very good land parcels across the region, very strategically located land parcels. Are you looking at improving your working relationship between the two companies in some manner? Was it a personal investment? What exactly is the plan there?
No. See, I mean, looking at new deals, looking at new projects, and obviously it will be with the listed entity itself. But it all depends. It depends on what type of transaction, what type of location, what type of financials that are there, and how it works. So it's always a work in progress. We have no fixations. We have absolutely no fixations, and we will definitely work with anybody who we believe is what we call reliable, and who will work with us and make sure that because for me, land is raw material. As long as I get my raw material in terms of land, I will definitely look at this thing. And of course, it's ultimately the financials that at the end.
Sure. So basically, you're not denying that conversations are on regarding some specific land parcels or some joint development, because when we speak to them, that management has come exactly on this platform earlier, and they have said we are constantly in discussion with some of the premium real estate majors across the country for some advanced big deals going forward. Now they want to become a provider of raw material, which is land. They don't want to develop anything by themselves. So you are actually indicating that yes, some transactions are being discussed on the drawing table.
It's all work in progress all the time.
Well then, all right, Mr. Razack, we get your point. We'll look forward to the news on the exchanges whenever it actually is clinched. Thank you so much for chatting with us today.
So much. Lovely talking to you.